Hi, I'm Steve Miller, and this is an abbreviated Market Week show. I went to Las Vegas a couple weeks ago, and while I was there, I caught COVID and brought it back home, and I've been laid up all week. Still, I wanted to get out a show because I was also off the previous Friday. Last week was a slow holiday week, much the same as we've seen, though, for many months, with the tech stocks and AI leading to the upside. In fact, Apple, Microsoft, and Meta all made all-time highs, though what was the market leader, Nvidia, struggling a bit more, as that may actually be forming a big top. At the same time, the broad market, weaker as it has been, and small caps actually lost ground on the week. For the stock market, our indicators and analysis have been positive, though looking for potential minor corrections, and we have not seen those come at all. It's a testament to the constant flows into the heavyweight stocks that are driving the indexes up with that very, very narrow concentration in market cap and in upside movement and in earnings. I'll show you why in coming weeks it could be more volatile than we have seen as we do get into a period of, well, some minor risk. For the week, stock market S&P 500 gains 2%, the Nasdaq gains 3%, the Dow up about only 0.5%, but the Russell loses 1%. Bond market, that is strengthening here as interest rates are beginning to fall. We have been projecting that to happen at this time. And 30 years gain about 1.2 points, 10-year yields drop about 7 basis points. They were up on the week, the yields, but then they did reverse, and we're looking for it to get down to close to 4% or maybe even down to 3.6% sometime pre-November. Gold market extremely strong, and that moved away from a trouble area as it gains $62 as yields fall and the dollar falls. Silver, a strong week, and now we've upgraded that to a potential of moving up to as high as $34 on our charts as it gains to over $2 on the week. Dollar loses about 0.8%. And we think it's going down to around 104 or maybe lower just in the next month. And you have to excuse me if I clear my throat because, as I said, still struggling from COVID. Oil up $2. It was upgraded by us to head potentially to 84. It's gotten close to that. And now we've upgraded it again to getting as high as $88. If you want to get all of our analysis on the all of the futures that we do every week, you can watch the Future Speak show on Wednesday. Arvi does a great job on that, and he will show you the analysis on all of those futures for levels 2, 3, and 4. Of course, if you're a PSP member, that's a Premium Services Preview member, which you could still join, you'll be able to watch Wednesday's Future Speak show coming up. So very interesting. Become a PSP member. I'll tell you a little bit more about that coming up. If you want to get acquainted with askSlim.com, sign up for that free Popular Services Preview or Premium Services Preview. On YouTube, subscribe to this channel, click the notification bell, and like this video. Give it a thumbs up. On X, follow us at askSlim, and any questions you have about our memberships or about our huge offerings of education and analysis, write to Matt at askSlim.com. This is a review of Bitcoin. I put up a trade idea back on June the 17th that was bearish, and that was published because we had done several trade ideas in Market Week Live. This is the one that I have shown, and I wanted to review that now because it's just a great analysis, a great example of cycle analysis, and a good way for you to learn and to see what happens when these indicators and the cycle analysis all comes into alignment. This is the Bitcoin charts. Excuse me again. And I'm going to open up the weekly chart right here. Now, what happened was that it created this double top right here. And what that double top was a warning that the market was likely to have another move to the downside. Now, we had shown monthly analysis, and that the monthly had come down with this weekly 23.6%. All the previous monthly corrections were 39% or greater. So it seemed like that was not enough. And once the reversal scout turned down again over here, that was a warning to us that the momentum from the intermediate and potentially the monthly had turned down, and that we were going to see further declines. So once it gets underneath this level, which it did this week, that's a big warning with some number of weeks still ahead of us before that trough is due. So what we're looking for here based on the weekly is that it would come down here to at least a 30% decline from the peak, which is at the 38.2% fib retracement, and potentially got down to that 39%, 50% retracement. So 39% decline, 50% retracement, down here at close to 44,000. So projections right now down over here, this is about 51,006, this is about 44,003. And this period right over here is in alignment with the monthly, which we had said potentially would be lower than the April trough. So here's the April trough. It's gotten lower, and that said to us there's still a lot of risk here based on the weekly chart. Now, if I switch over to the daily chart, what we could see in here is this is where the slim ribbon over here turned negative. That's right here on 6/13. It also broke down underneath this key level right here. I'm just going to grab this so you can see where that cycle low was right there. And once it gets under there, which it did over here on 6/11, it warns us that there's a decline coming. So with the weekly turning down and the momentum turning negative and getting below this level, it put, to us, it warned that there would be a short side trade that could potentially work. And this is the date, 6/17, we put out the short side trade. You could see in here, this is the option bias indicator. And it was positive through all this period here. It turned negative here. It turned positive again here. But then it started to deteriorate, and right over here it turned neutral, and then right over here it turned negative. So we're getting more and more warnings at that time frame, right around 6/17, 6/18, that this market was in trouble. So with the weekly and the monthly, and now the daily negative, that put together what we thought was a high quality trade. Our projection was that it would get below 55,000, probably down to the 52,000 area, which was our target, short trade target, 52,000, as you can see right there. And it got down over here so far to 53.6. Now, what you can see is the minor cycles. Here's your minor cycle rally and correction. That was bullish. Your minor cycle rally and breakdown, which is bearish, said it would likely decline through this period here, and then getting into the next rising phase. You can see there are two upward arrows right over here. It's because I don't really know yet whether this low right over here is going to get broken or tested again in the next few days. Maybe not. Either way, we're looking for a rebound, probably to get up here to about 61.3 to a little higher. This is 63.8. This is a sell area right over here of high quality, and the timing for that is anywhere up here between, let's say, July 12th and somewhere around July 25th. That would seem to me that would be the time frame to at that into this sell zone right over here that we would see the next decline, and then that sets up this period down over here into early to mid-August for another pretty good downside move. So this is another potentially high quality sell area coming up right over here. And again, weekly and monthly are all aligning with the daily over here, and that is a time period for a lot of potential downside risk. So that's what's really important. You could see as I put up here these cyclical periods in here, and the final stage of a monthly cycle can get you a large decline, which you can see right over here, which was well, that wasn't the end of it there. Sorry, I don't have that on this chart. But you could see each of these time periods where the minor and the dominant cycle on the daily chart set up a sizable decline. That's right here and right here, and then coming up right over here. So that is the likely period of a big decline. And that's one more thing to look at in here. This is the momentum chart, which takes the slim ribbon and puts it into an area chart. And you can see in here that looks like a perfect spot right over here. The date here was 6/18, where this turned negative momentum, and it gives you a good downside move that we're having right now. So very important to have all of these askSlim indicators available to you and understanding how the cycle analysis works with it, weekly, daily, and daily momentum, which very nicely set up the trade that we have on right now, which is still likely to get us to see a sizable decline for potentially the next, let's say, 5 to 8 weeks. So rallies in here in Bitcoin are not to be trusted. Stock market analysis and projections on the S&P 500. Make sure you read this first, because that tells you about our approach to analysis and about your use of our analysis. Very important to read this slide. This is the askSlim Premium Services preview. All of the stuff that is here is just an amazing list of, and shows you the depth of the type of analysis that we bring. This is our preview that's free to you. You don't need a credit card, and this is scheduled to end on July 12th. That's just in a few days from now. You'll have time to still preview if you sign up now, as we extend some time out to you to be able to review all of this. Go to the top of the askSlim website, click the Learn More button. There's a lot of detail about this, and then sign up for free. You don't need a credit card, and you're going to get a great idea of all of the fantastic work that our analytical team does, and everything that is offered to you in this special, no cost at all, no credit card required. Sign up for that right now. This is the look at the day trader cockpit, and this is just one thing that I want to show you, because if you're an intraday trader, this is phenomenal. It tells you the conditions of the market and shows you my favorite 8-minute strategy and the price zone roadmap, which shows you support, resistance, acceleration zones. It's amazing. And this is broadcast all day long with the 3 different stock market studies on here. I'm sorry. S&P 500, NASDAQ, and the Russell. A little distracted right now by my cough. And you're just going to love that. Stock market analysis, S&P 500, multiple time frame analysis. I'm just going to bring up that chart I just did on Bitcoin and switch this over to SPX. You can see it loads up on all of those charts, and I'm going to bring this forth. So we have been in this period of super strength in the market, moving up to heights that I certainly did not expect. Only people with the most extreme bullish forecasts had the market getting up anywhere near this level, and many now with forecasts up to 6,000 or higher on the S&P 500. Based on the analysis I see right in here, the market has gotten up to that monthly extension right over there, which is very key. Now, this was the absolute highest level that we saw in our revised upside forecast that we thought the market could get to, just over the 5,500 level. But now we have to be looking at higher levels, because the market certainly is not stopping. Now, when you see the minor cycles right in here, the next time that they line up together isn't until this yellow oval out over here out until pre-election time. That's September, October, November, where the really big risk is for this stock market, where you could project for prices much lower. However, right now we have this super strength, and you can see here our reversal scout is very positive, and a reflection of this money flow that has been coming in into these high-tech stocks and this very narrow rally that we have seen, which just keeps going. So what I put in here now are the potential for higher projections, because that's necessary. When the market is this strong, I can't deny that fact and have to show you the next potential levels. These lines right over here are from the daily chart. I'll show you that also. That's at roughly 56.15 and 56.56. Those are important levels. You can also see this level right over here at 56.71. So 56.56, 56.71, that's the 61.8% fib extension of this big cycle that you see right in here. So those are key levels. Now, what's really interesting is that the market cap to GDP, somewhere just in the middle of this right over here, will be at 200, a level never ever seen before. The valuations by all measurements are as extreme as they have ever been. And this is the most amazing rally that maybe I've ever seen in my 50 years, because it has continued during this period of very high valuations. And I traded the rally up till 1987, before the 87 crash. Of course, I traded in 1999, beginning of 2000, before the dot-com bust. And, of course, in the rally that came just before the great financial crisis. So I've traded all of those, and none of those got to this extreme, which is just, in my opinion, wild. But it makes sense when money is flowing into a very, very concentrated number of stocks that weigh so heavily in the indexes that are expected to get huge increases in earnings. So that doesn't justify these levels. It just does say that's the reason. And also, it does highlight the fact that any little bit of disappointment and volatility is going to be huge, because money will come out of those very quickly. So while the market is very strong and at these very high levels and momentum is strong, we have to allow for the fact that it could get even higher. At the same time, I really have to allow for the fact that you're going to see some extreme movements in here coming up. And of course, there's the election and everything that goes with it. And that is really just starting. So we have a corrective period out over here on the weekly chart. Now, some of these corrective periods don't give you much in very strong markets. When you look at this one right over here, the correction was from 47.95 down to 46.79. So 47.95 to 46.79, that's like 100 and something points. That was like 2.5% decline right over here. That isn't very much. But when you go back to some of these other midpoints, you can see in here it was very strong, and that gave you only a little bit more of a decline in there, as that was also swamped. When you look at this one over here, it gave you a much bigger decline. That was in the area of 10+%. So you don't really know, but in my opinion, is when you're at this period of extreme valuation, the volatility is likely to be greater. So we're looking for some bigger moves. Now, the best case I can make is 54.25 on the downside. Well, that's not very much. What is that? 3.5%. And then this support right over here, 53.35, which gets you down maybe about 6%, 5.5%, 6%. So none of this is very big declines that are expected. Those bigger declines are expected out over here and into that fall quarter, the fourth quarter of the year. So for now, we're just going to look for some sort of a chop to develop and some failure. But in the meantime, the market will have to show that to us. Remember, this is still giving you the strength in here, even though we're getting up to a period of extreme high volatility potential. This is the daily chart in here, and you can see that the rhythms in here on the cycles are beautiful. as you've got this correction right over here. Now, I want you to note that this was swamped, made a triangle right over there. This was swamped, made like another triangle right there. This was swamped, made a rectangle right over there. These were all super strong, as you could see right there. And now when you get to these last cycles right over here, this one, well, it gave some ground, but it wasn't all that significant. As you can see, it actually made a diamond top in there and a little bit to the downside. But once it was over with, there wasn't much time left to fall. This was just this little rectangle that you can see right in here, that the upside pressure, as you can see from the slim ribbon, and of course from the reversal scout on the daily, as you can see there, and from the weekly chart, just would not allow a correction at all. Once the time period was over with, then you get into the next rising phase, and you've got this very nice rally here over these next several days. Now here are your upside projections right in here as we build this cloud. In other words, the higher a channel right in there. And Hurst, my work comes from JM Hurst, and he always enveloped these cycles. I put in the top of the envelopes is what you see right over here. But then on this next projection, I put in the full envelope. I'm projecting what is the upper or lower potential envelope in here. And you'll notice right over here, 55.41.12. That's this low right over here. If this market turns down and breaks that, it will tell us that we are in an intermediate correction, as what we see right over here, and that's what, of course, we projected on the weekly, that period where we thought volatility would go up, and that takes you to sometime around the first to second week of August. Right over here you could see first to second week of August, so there's an alignment with the weekly cycle. And then if this were to break, then what we would do, we would put in a lower channel right in there, and let me just duplicate this and you can see, and this would only show up, promise I can grab that, this would only show up like this were we to break this support level right over there. In the meantime, that's not the case, so we only show the lower channel or envelope coming down to that level right there, the midpoint coming down to what would be midpoint support, which we don't have in there yet because this is only 3 days old. So we'll see what happens in the next few days. We'll be putting in some supports, but in the meantime, we're projecting higher. This is that monthly extension that we have right in there, and if it were to stop today and then move right down starting Monday, that would make sense to me. If it gets through the monthly extension, then these are those levels around 56.14, 56, something right around there, and then the 78.6% at 57.13. Again, when you get to those levels, you're up at levels of 200% to GDP, and I can guarantee you that if that happens, the reversals are going to be dramatic, though they can be dramatic at the level we are at right now. You can see on here on the bottom, this is the option bias study. It turned negative over here for a brief period of time while the market was correcting. It has been positive, telling you to keep your option positions in the index biased to the long side during this whole period. And guess what? That would have been fantastic. So let's move over to the momentum condition chart right over here, and you can see this is where the momentum condition turned positive at 51.80. right over there on May 6th. Now, if you get our market condition monitor, MCM, which are for level 3 and 4, it gives you all of this information. And when the conditions change, overall, you can actually get notified. We have a great new notification system that you can put this app on your computer, and it will notify you when these things change. It's fantastic for level 4. And you can see in here it's been positive. That little minor correction we saw right over here and right over here as it stayed basically above the slim ribbon, which gives it support, and it continues to move to the upside. So momentum's still strong. You can see the slim ribbon PO as it gives these upside momentum reversal conditions. So it says upside momentum to resume, upside momentum to resume, again and again. So again, this is a level 4 indicator. So write to Matt at askSlim.com if you want to know how to get that. the slim ribbon PO. That shows you the momentum conditions very strong. This is your 2 hour, and on the bottom here is the market condition indicator, and that gives you an indication of when it's strong. When it's above the 25 area, it's positive. When it gets under there, it turns into a test period between 25 and minus 25, and if it gets under there, it then turns negative. We haven't seen anything like that for a long period of time. It's sitting at about 89, a very positive condition here in the askSlim MCI market condition indicator. So positive, this is the slim ribbon positive, and a lot of strength that you see right in there. That is, again, the weekly, and let's just go over this quickly. Weekly positive, momentum positive, into the resistance area, high volatility expected during this period. This is daily, moving into the upper channel, positive, with some upgraded levels in there for resistance, that key level 55.41.12. Until you get under that, we have no reason to be anything but positive. And positive momentum conditions here as we look at the daily momentum with upside resumption signals, and the 2 hour here as still positive. That is a look at the stock market. Wanted to give you that comprehensive review as I've been away for a couple weeks. Please pardon my coughing. I've stopped a few times while doing this recording just to be able to clear my throat again. And hopefully next week I'll be a lot healthier. We're going to have the whole team for Market Week Live. And I think you're going to like that again as we do that on the July 12th. That is just a great opportunity to learn from all of us. Again, go to askSlim.com, get acquainted, sign up for that Popular Services preview for free on YouTube, subscribe to this channel, like the video, and watch the member videos. And on X, follow me at askSlim, and don't forget, write to Matt at askSlim.com for anything that you have a question on what I showed you today or any of our offerings. I want you to be so careful. It's so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been